Gold hits a 2.5-year low. My name is Michael McCrae. You're watching Kitco Roundtable here at the Gold Forum Americas. With us is Kitco correspondent Paul Harris. Paul, I think this is the first time we've ever done this in person.
It is, you're right. It's very odd. But let's see if we can pull it off.
And with us is Steve Jong. He is the chair of Integra Resources. He is the CEO of VRIFY, and he's an all-around visionary in the mining space. Welcome back to Kitco, Steve.
Thank you. Thanks for having me.
I think we're not going to be talking about the news today, just because we're doing this earlier. We're doing this on Tuesday, September 20th, but I will note that it is a very interesting time to actually be holding a gold show. We see that gold has dropped to 1660 right now, which is actually kind of put a pall on things that are happening here right now. Paul, I think probably the theme that I've seen through, or probably the top theme, if you're a junior and you're an exploration company and you haven't raised any money, I think you're kind of hooped right now.
Yeah, I think there's definitely a lot of hurt and there's perhaps a lot of blood on the streets to come.
Yeah. Steve, it's tough right now in terms of financing, correct?
It is, and every company, it's very well known when a company needs to raise money, obviously being public companies. So there's a lot of them that are in that spiral of like the market knows they need to raise money, so that puts pressure on the stock, and then nobody wants to raise money because there's so much pressure on their stock. But sort of, yeah, these companies need to come up with something. It kind of reminds me of PDAC. It was 20, what year would it have been, 14 or so, and Rick Rule gave a talk, and it was about how all these companies there's essentially 600 companies that have less than 6 months or 3 months working capital. Mm-hmm. And it's like the end. What's interesting about the sector, though, is these companies always find a way to survive.
Yeah.
I think there were more companies 3 months later than less in the sector. So I don't know. Juniors find a way.
Yeah, things get spun out into new entities or vehicles are hived off, and you see a plethora of $1 million raises.
Yeah. What's fascinating about right now is there's no sector to hide in, though. Like in what we saw in previous downturns. Is like all of a sudden a bunch of mining companies or junior minings that were really, really early stage became cannabis companies or became blockchain companies, whatever that is, and so on. But right now it's like there is no corner in the entire sector that you can hide in.
We've had some sort of becoming carbon credit companies or carbon credit streamers or royalty companies or something like that.
Which is probably much closer to the mining or the mining royalty business model than kind of some of the other ones in the past. But I guess a lot of these companies are run by entrepreneurs for a reason.
You had a harder take on this convention right now, and you used the B word, Paul. What is that, Paul?
Well, at the risk of not being invited back next year, I think this is, I've been fortunate to attend this event for the past, 5, 6, 7 years, and this certainly is the most boring Gold Forum Americas ever. I would even go so far as to say it's more boring than last year's event when pretty much nobody came. Because it's almost like we're at the Institute Chartered of Accounting convention, because everybody's talking about capital discipline, balance sheets, and share buybacks. Nobody's actually talking about building things, developing things. There's no excitement at all. At least last year, there were the rumors of, is Barrick Gold or not going to buy, Great Bear Resources? There was a lot of speculation. There's a lot of rumors about who's going to buy who. This year, there isn't really even any of that.
Mm-hmm. Steve, it's been a problem as well in this space?
I've always found it interesting how, whether it's M&A activity or even just the gold sector in general, it's September, like everyone takes not summer off, but things slow down in the summer, and then everyone gets really excited for September. Things are going to heat up in September and so on. I'm pretty sure if you look at the last 10, 20, however many years, there's zero correlation between September and sort of commodity price. And I think what you're probably going to see is a negative correlation, like we're seeing now, where we're sitting at this all-time low. It's always fascinating how exciting everyone gets as if the commodity price actually cares at all about when our conferences are and so on. But I would generally agree. There has been some exciting activity, but it's like Great Bear would probably be the most recent. An interesting one last week, which is probably the least controversial type of acquisition, but the Agnico, where you see like a very kind of gold-focused, one of the gold companies go into kind of dip its toes into the sort of the copper and base metals. And I think that's something that you might actually see more of, whether that leads to M&A being less boring to be determined. But I thought that was super interesting to see Agnico make that move.
I think it was interesting, but I'd also push back a bit on there. The CEO of Agnico spoke and he said, we're not a global gold company, we're a very regional gold company. And so Agnico's obviously got a great deal of experience and strength in Mexico.
Yeah.
This deal, San Nicolas, was in Mexico, in Zacatecas, which it said is the Abitibi of Mexico or the Nevada of Mexico, depending on where your preference is. And so in that respect, it's really sticking to its knitting. Presumably it's there for its experience and knowledge in that particular jurisdiction to add into Teck Resources, which doesn't have that, but obviously Teck has all the experience under the sun in the base metals.
And it's one where I think in the past, gold companies, they had this sort of the gold premium. And anytime they diversified out of the precious metals, you would worry that you might lose your premium. I think it's pretty obvious that premium doesn't exist in the market today. So I think it probably opens up the doors for a lot of these kind of precious metal focused companies to rethink about, or just to revisit other opportunities, which in the past they may have been criticized by their shareholders for.
Yeah, and I think the only sort of other recent transaction is AngloGold Ashanti buying the package, the Walker Lane package from Core Mining in Nevada, which was obviously on the cards for a number of years anyway, since it took over Corvus Gold, which closed at the start of this year.
And I guess. Sorry, Michael. The only other one I was thinking is I chatted with a few people last night who are all waiting for the Yamana and Goldfield presentations this morning to see. Just to see if they can get some sort of morsels of information or something out of it. And from everything I've heard, I didn't see the presentations. From everything I've heard, they were just quite straightforward. By the book. Here's what we're doing. Here's what we're executing. No one's really sure where kind of that one sits.
I think one of the interesting things there is, the deal was announced several months ago, and the entropy of the relative share prices means that the premium that Goldfields is playing is kind of disappearing day by day, gradually.
Exactly.
Metalla did make a note, though. I was talking to the CEO just before this interview, and it was that there has been some consolidation, mind you, in kind of the mid-tier within the gold and royalty sector as well, and that's been over the last couple of months. So you're thinking about the transaction that Sandstorm did, and then also what's happening with David Garofalo's gold royalty as well. Yeah, exactly, as well, too. So there's been a number of those transactions. So,
and I think in those downturns, it becomes natural for everyone to start thinking consolidation is a good thing. Like we should kind of, there's synergies involved and sort of less G&A and so on. So it's just such a natural thing to be having consolidation discussions during that. But it's not, like we haven't seen that much of it. It's almost like you say it because it's obvious we should be doing it to find ways to reduce G&A and find synergies. But it's, I can't think of that many kind of big consolidations that are taking place.
I think you've still got the aspect of entrenched managements there. And although perhaps the reason for that has changed because in this kind of market, management presumably doesn't feel confident you'll be able to get another job. Yeah. So I'm going to just sit here and not agree to a deal because I want to keep working or what have you.
Which is too bad. And I think you look at like your Sandstorm Nomad, that transaction, you look at the Nomad team and what they were able to accomplish in such a short amount of time. When you do it right and you go through, like finding a job is not a concern for kind of people like that. Like there's when these transactions are done properly, there's every opportunity in the world. If that's your concern, you probably shouldn't be doing that job in the first place.
I don't the one thing I always quite understand about consolidation is why is that good? Because you talk about like the tech sector, for instance, and then you have your Apples and you have your Facebooks where you have these giants that basically control the industry, and it's very difficult to get entrants that come in as well too. I mean, if we got to that space where there's like one giant gold company or stuff like that, and then you wouldn't have any of the competition that you would have between the two. I mean, is that a better ideal or something like that?
I do think liquidity, like share price liquidity, is a massive problem that the entire sector has. And if you have two companies that trade X and you put them together, they're twice as big. They technically should have twice as much liquidity and trade that much more. So bigger companies trade more. And it's not probably like if you have a 2 million ounce resource and a 5 million ounce resource, I would say the 5 million ounce company probably trades like 5 times as much. So I think that's a big part of it. But to be honest, everybody has a different opinion. I had a meeting this morning with a fund manager who manages probably $2 or $3 billion, and his take, kind of simplistically, was take 2 development stage assets, put them together, and you have twice as many problems. Mm-hmm. So it's not right across the board consolidation, but I do think like you've seen this trend in the last 5-10 years where individuals at these funds, through fee compression and other things, are tasked with managing more and more per person. And so the bigger companies are, the more concentrated the positions they can be, the more they're able to invest in versus managing a whole bunch of tiny little positions.
And I also think, to follow on that, or to expand on that, Stephen, I think you've got the aspect of the investors. How many names do they want to look at? A mining analyst, a good dedicated mining analysts will perhaps have maximum 20 names that they cover. So how can you expect an investor to sort of cover more than that, or be interested or up to speed in more than that? So from their point of view, the fewer names that are, let's say, in the mid-tier space, the better, because I can, if there's only 15 names, I can keep up to date with, who's the best investment or not. If it's 30 names, I'm just going to throw in the towel and focus on something else.
I could not agree more. And at the same time, and this isn't just mining, but you have this sort of global trend towards kind of each of our attention span shrinks every day, and that goes from investment to everything that we do in our lives. So it's almost like the mining approach of, we want to differentiate our story to kind of make us stand out. All it does is complicate it. So an investor coming to the sector sees 2,000 companies with 2,000 different stories and all trying to be unique and stand out, and it's the exact opposite of how people's brains work. So it's that kind of, the more choices you have, the harder it gets, especially because mining is like, every story is different. Like every gold company is different. The geology is different and so on.
And that's the paradox of choice.
Yeah.
Exactly.
I want to go back when we started talking about the B word and this being a boring conference. And this is why I wanted to have you on, Steve, and just talk about marketing and communication for the resource space. We had you on, I think it's about 2 years ago. And then it was just at that time where crypto was starting to take off. Yeah. We see it have the big run up and then it came down again. I think it's fair to say that crypto kind of stole some of the attention from gold. There was some of the benefits during that run-up that gold could have realized, but the marketing is just so much better with what crypto does. It seems that the resource space lacks that. We don't seem to have a sharp marketing, a sharpest message. We don't seem to really be communicating with younger people and bringing them into the space as well as we should. And this could be a real threat for us because, crypto is always going to be there.
Yeah, I personally am not a believer that there's a finite amount of capital to invest in any one given sector. I think we've seen, whether it's through the sort of the Robin Hood phenomena or the meme stocks, there's large amounts of capital that can kind of come into sectors. Mm-hmm. I think what crypto does, like that whole cryptocurrency sector does a really good job of that sector was built in the last 15 years. So it was just naturally, whether it's the people building it or the environment that it's built in, it's built in an environment of social media and Telegram and so on, where it's almost like, whether it's gold or just mining in general, it was built years and years ago. So it's, in some ways, it's almost like everyone always criticized Microsoft and Microsoft Windows because it was old, clunky technology, and they just tried to keep making it prettier and prettier and slowing it down and slowing it down. And that's kind of like mining in a lot of ways, where it's like we need almost to go back to first principles and refresh how we communicate as a sector. I do think personally, and I've been in the sector for about 15 years now, I actually don't think in my short time in the sector, but we've ever had an opportunity as a sector to be as relevant as we are today. And I do think the mining sector is completely, I'm trying to watch my language, screwing that up right now. Mm-hmm. In that sort of, in the inflationary environment, that is gold and silver. Like that is kind of, right now is the environment that everyone waited for. And I think we're waiting for the dust to settle, but I do think you're going to see precious metals really perform on the back of that. The battery renewable kind of transition to the renewable future and battery technologies, that's copper, that's nickel, that's cobalt, that's lithium. There's never, like we as a sector have never been more relevant and more important to the world than we are today. But I think sort of showing cross sections of drill holes and things like that, it's not enough to make ourselves, to draw that connection between that Tesla, that sort of the, whether it's a 20 or a 40-year-old loves, and kind of this transition to batteries and kind of what we do as a sector. Yeah, and I think we can do what we've always done, maybe just rely on commodity prices to go so crazy that it just carries us all, or we can actually start rethinking what we do as a sector and how we position ourselves.
I will say that the battery metal sector, though, could be challenging for us right now because China's really turned this into something that's making it part of their state. They've actually, they set strategic plans about it. Then you look like the types of acquisitions that they've done and the amount of integration they've done and how much they actually own of the EV space. There was a point made on another podcast, for instance, that you have EVs that you can sell all up and down the range. You can sell, people can buy the high ends and they can also buy the low ends. You can't do that in, North America right now. It looks like you're not going to be able to do that for a while because everybody's being safe in the sector in the battery material space in the North American markets because they're thinking quarter to quarter. Yeah. And just given the downturn that we've had recently as well, too, that's even going to get more so. talking again about all of the, how would you say, the capital structure, capital discipline. There's not going to be anybody that's going to be sticking their neck out in this market. And
this is probably really off spec, but I think the average mining CEO really loves their old Detroit V8. Mm-hmm. Something you've got some embedded resistance to the story there as well.
Steve, speaking of drill results that you were talking about before, congratulations on VRIFY. When I'm doing lookups on what is happening with various mining company, I'm sure this has been the same with you, Paul. We've noticed the VRIFY widget that has appeared on more and more sites. Could you talk about, again, what was the vision in terms of actually putting that together?
Sure, yeah. So VRIFY is a technology that we started at Integra Gold, which was our company from 2012 to 2017. And we essentially wanted to do, simplistically, it was the Rio Olympics. And we saw these 360 tours of the Olympics. And we said, well, we just did a site visit and chartered a plane. Why can't we do that for our mine site? And the concept was not trying to replace a mine site. We want to give a tour to 10,000 people. Mm-hmm. So we created this virtual tour. When our company was acquired in 2017, we took the technology rights, bought those out and created VRIFY. And I guess the way I'd sum it up is like we essentially at VRIFY believe that the way the mining industry communicates to investors and stakeholders and community groups and regulators, indigenous groups and so on is wrong. Mm-hmm. That everybody is making decisions every single day with essentially like 20 to 30% of the data that they should be using to make those decisions. Mm-hmm. So we take, whether it's a virtual tour of a mine site so you can actually see if you're investing in something with established infrastructure or someone's backyard and wherever, or showing drill results in 3D so you can see it in relation to all of the other drill holes that have ever been drilled in that project before, so you understand, are we kind of drilling down the pipe that's been drilled like Swiss cheese, or is this actually a new discovery? And that's VRIFY. It's essentially we create these interactive presentations, but what's happened in the last year is we've realized that taking technical information in 3D and visualizations and just giving it to a mining executive can actually make it worse. In some ways, because there's so much information. Yeah. And going back to that sort of the shrinking attention span of a person, what we do now is we do a lot more hand-holding with our clients to make sure they understand. Like you have this basket of technology that you can use in a meeting, but if you're with a retail shareholder who just wants to talk about your management team, you don't need to pull out like your 3D model and so on. So it's a bit of a balance of those two things. That's really exciting right now, like between Beaver Creek and the Beaver Creek conference last week, which is more juniors. And this conference, like our VRIFY's team here has given over 50 demos to new companies. And I think we're starting to get to that tipping point as a business where you are going to see kind of technology like ours become the standard. Because in the long term, I do believe that somebody's going to look at a press release with a drill hole and then see a quote from the CEO saying, this is the best drill hole in the world. And here's like 40 pages of drill tables that I'm sure you're just digesting every part of it. And you'll look at that and be like, how can I rationally and logically make an investment decision, especially if it's with someone else's money, without seeing this kind of in the context of, if this area been drilled before, or is the grade smeared across an entire drill hole and things like that.
I want to sort of jump in there as well, Stephen, because going back to your previous comment about how do you appeal to a younger audience or a different audience. I've seen this again and again and again. Mining executives want to jump into the VRIFY or their corporate deck. They want to tell you what they want to tell you, not necessarily what the information you're interested in. And so, as a journalist, I have to sit there and listen to all this stuff that I may already know or may not be interested in before I can get to the question I want to ask about, if you're in Chile, where's your water coming from? Absolutely. The conversation could end right there if the answer's not good. Yeah. And you see this, mining executives so used to just going through page by page by page without even thinking about or adapting to who they're communicating to and what their information need may be.
I couldn't agree more. We describe our presentations like a hop-on, hop-off bus tour, where you have a preset, say it's 10 things that you want to touch on. But if you're a PhD geologist and you're a kind of generalist with an accounting background, I might step off in my share structure and spend most of it talking about my financing plans and my debt structure, other things like that. If you're a PhD geologist, we might just jump right into the geological model. Those are two very different presentations, but you're able to step off and kind of cater the presentation to exactly what each individual is looking for. There's so much research, not to do with mining, but sort of investment pitches and sales in general, where kind of what is the perfect amount of time that you should be speaking versus listening in a pitch? Because I think there's a technology, it's called Gong, and it's a sales technology, and I think you can integrate it Salesforce and other things like that, but it records all of your calls, all of your kind of sales calls, and so on. We haven't used it. I've heard of other groups. I'm fascinated by it, though, and it tells you, like, look, you spoke 72.3% of the time, the perfect kind of based on all the calls that we've recorded for your company in this massive database you have. If you go above 46.3%, kind of you start to lose attention, and there's so much research that's just not applied to our sector. And I actually do think a lot of it comes back to the fact that, like, when times are good, you can say whatever you want, people are going to invest. When times are bad, that's when we actually need to roll up our sleeves and kind of think and really work at how do we connect and engage with investors, and knowing that what you did 20 years ago doesn't, like, not say experience is a bad thing, but, like, the world is evolving very quickly, and how investors think is evolving very, very quickly right now. Like, meme stocks didn't exist 3 years ago, and now you're seeing some of them come into actually mining companies and so on, and open up big new pools of capital.
Lastly, Steve, you're the chair of Integra Resources. Updates over the next 12 months.
Integra is an interesting one. So Integra came out with a pre-feasibility study, would be about, it's all a blur these days.
February.
It's about 6 months or so ago. And it was sort of it's what the market had been asking for years, like big production profile and so on. And the market has changed so drastically that, fortunately for Integra, it has sort of a smaller production, lower capex up front. So it's really started to work around that, like that low cost, high margin mine. And what's really exciting about what Integra is doing right now is that they've actually gone back, and it's an old mine site, they've gone back through all the waste rock piles. Turns out that the cutoff grade, so what was considered waste back then, because it had to go through a mill and justify the milling costs, those waste rock piles are actually like, there's a huge amount of mineralization sitting within them. So the company was actually planning on moving them out of the way to make their mine anyway. So now they're just planning on, they're doing a bunch of work now to kind of determine how much gold and silver is contained within them, and then just moving them right onto a leach pad eventually would be the idea. So anyway, it's a really exciting time for it, because I think there's a lot of companies right now looking at the gold price, looking at the inflationary pressure that the world's going through and the costs and so on. And it's almost like, well, you're thinking as a company, well, hopefully this changes, because our plan and our what we're trying to do today just does not work. And Integra is one of those few companies that's actually actively advancing, just raised $30 million and has everything it needs to position itself for this. That being said, like all companies, if gold kind of finds a step up, and it'll benefit like all the rest of them.
Steve, Paul, this has been a delight. Thank you very much.
Thank you.
Thank you, Mike.
My name is Michael McCrae. You've been watching Kitco Mining here at Gold Forum Americas in Colorado Springs.